Hello, and welcome to another update video about ADA, Cardano. So the ADA chart has really not moved in the recent weeks. I know it is getting quite boring, but we try to make sense of the microstructures, and I know that many of you are seeing this as an educational exercise as well, given that we track the waves, we apply Elliott wave rules and guidelines, and we'll take a look at relevant support and resistance levels as well as macro patterns. So it's about the macro and the micro. In this video, however, I only want to take a look at the 4-hour chart, 1-hour chart. Bigger picture hasn't changed at all. We covered it quite a lot in recent videos. So let's just talk about the 4-hour time frame. The white scenario still allows for the interpretation of a triangle. That is still sort of the, let's say the idea I have, kind of my favorite scenario here in the white scenario, to see it as a triangle, as long as it's holding, as long as we are printing higher lows, lower highs, and until we get a break, because this triangle should form higher lows and lower highs, and it's doing that right now. So we have from this third wave top, we saw the A wave, the B wave is the lower high, the C wave might be unfolding still, we'll take a look at that in a minute. Then we should get a D wave and an E wave, and suddenly you have this series of higher lows and lower highs. Higher lows, no, that's completely wrong. Lower highs and higher lows. Yeah, so sideways consolidation essentially. And it's just important to understand that triangles are extremely fragile. Okay, they are patterns that break frequently. But so far, this is a range, and until we get a range breakout, I continue to track the triangle, especially as long as movements in the range remain corrective. What does it mean, remain corrective? As long as they stay 3-wave structures. So these are at the moment 3-wave structures, which means we have, as I said here, this A wave, in 3 waves. Move up, 3 waves. Move down, bit more complex, but as I said yesterday, a C wave is often a more complex form of a correction in a triangle. So if one element of the triangle is more complex, it's often the C wave, and I'm tracking it as a so-called W, X, Y structure, and the Y wave is an A, B, C. So that's how I see the C wave. From there, then a bounce could occur in a D wave. So the question is, when would the triangle be invalidated? Well, with a break below the 50.9 cent level, we have a confirmation that the market is going down lower and probably will test the August, September, October lows. In a different structure, it would not be a triangle then anymore. So to maintain the idea of a triangle that could actually break out to the upside, 51 cent needs to hold. That's the key level for risk management. And that doesn't mean that the triangle is a great setup to trade. I mean, just because we are tracking it here, doesn't mean that you have to trade it. It's quite a messy structure. And also triangles, what do they represent? They represent indecision. So the market doesn't really know yet what it wants to do. And therefore, we have to be careful. So in triangles, in wave 4 corrections, which this is, triangles can be wave 4s, and wave 4s can unfold as triangles. In a triangle, in a wave 4, capital preservation normally is key. Okay, that's what you normally have to prioritize. That's what Elliott wave tells us. So I mean, this C wave down could be complete. What I said in yesterday's video, and that's still relevant, we need to see a break above the green line there, the signal line at 77.5 cents. But I also mentioned that we could get, I mentioned it yesterday in one of the member updates. I added resistance, Fibonacci resistance between 68 cents and 74 cents. So that's the first area to watch actually here. We're now testing that. Any break above this resistance zone gives us an early, it's an early signal, right? Breaking above 74.2 cents will be an early, I don't want to say warning, it's more like an early signal that also probably the price plans to break above the green line and has already started the D wave up, okay? But because this is a micro 5-wave move down from the 26th of March high, we're also tracking the blue scenario more directly to the downside as a potential 5-wave pattern. So that would be the short-term bearish one. The problem is if we cannot break above resistance here, then the question is, will we actually be able to hold the 51 cent level? Due to proportions, it will look strange. Yeah, could very well, because that would mean extension in wave C, okay, but if this is the wave 1, well, considering the third is often the longest one, we might break below that low. So that's gonna be a bit challenging to watch. So again, main focus is now on resistance. And I'm not calling that a great long trade setup here. So it's simply tracking, trading, tracking, and being on standby for a clear upside impulse, which hasn't occurred yet. And just to understand the structure, any break above 74.2 cents will start to shift probabilities towards a more direct move up. Then the focus can shift towards that 86.6 to $1.05 area. However, please note that within a triangle, because of the lack of stability, and there's no solid foundation here, this is all corrective, the structures are super fragile and very prone to adjustments due to news events or just small fluctuations, okay? And but overall, for the last few months, the context hasn't changed here. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.